Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it. Alright. And basically we are discussing over the topic. That's what we are covering in the financial awareness or financial knowledge you can say. We are basically discussing over the topic PFRDA. Alright. So basically before continue this topic, we will have to do some little bit revision so that we could have ensure that we have established a good command on the topic. Okay, so basically we will go by the 5 things. The first is the full form. Okay, so the full form of PFRDA is Pension Fund Regulation and Development Authority. It is the full form. All right. Second is establishment year. In which year it was established? It was established in the year of 2003 or 2003. All right. Third point is type of body. It is which type of body? So it is a statutory body. All right. Fourth point, by which ministry it comes under? Ministry it comes under. So it is under the Ministry of Finance. All right. Fifth point, it's about the headquarter, where it is its headquarter. So its headquarter is at New Delhi. All right. So these are the 5 basic things which we should revise before continuing this topic. The full form is Pension Fund Regulation and Development Authority. Its establishment year was 2003. Type of body, it's a statutory body. Ministry, it comes under the Ministry of Finance, and its headquarters lies at New Delhi. All right. So this is the basic information. Got it? So now continue the topic. PFRDA basic definition and overview we have completed. All right. We have also completed the regulation authority, and we had also completed the objective part. All right. So I hope that you have gone through the previous lecture very well before you have arrived yourself in this lecture. If you are not doing so, and if you are just covering the lecture after lecture, it's my guarantee to you that you will not find yourself at a better place when you have to face the examination, because you're just focusing on compilation of things, not to reducing the burden. All right. So please make sure that you revise the topics properly in a proper manner. All right, before you have come for another lectures. So right now we are going to continue with these topics. Okay, so let's begin. Okay, so last time we had completed till these parts. Okay, now we have to complete with these parts. Okay, so the first is function and powers. First function is regulation and oversight of various entities. Okay, what do we mean by it? Let's start. PFRDA serves as the primary regulatory body for a range of entities operating in the pension sectors, including pension funds managers, custodians, points of presence. All right. In the previous lecture, I had told you that basically we divide India into 2 segments, organized sector and the unorganized sector. All right. Both these sectors having the schemes and the opportunities on the voluntary basis to be the part of pension sector. Okay, we had seen that in the formal sector or the organized sector, basically we have two type of entities, the private and the public, differentiated with each other. The private entities basically having the employment provident fund, whereas when we come to the public entities, or you can say for the government part of view, then basically they having a national pension schemes. All right, so it is a voluntary. All right, but in the unorganized sector, where there are no formal basis and the legal mandates are present, we had seen that PFRD runs a scheme like the Atal Pension Yojana on the voluntary basis. All right, so it is a primary regulation authority in that part, which not only controls the pension funds but pension fund managers, custodians, and the points of presence. Okay. These entities play pivotal role in the administration and management of pension funds and services. That's why it's become very, very essential to look and oversight them. Okay. Thereafter, PFRDA's oversights ensure that these entities adhere to the regulation and guidelines established for their respective roles. I had told you in the previous lecture that PFRDA uses the rules and the regulations for the regulated part. All right. And they oversight and ensure that the entities which we had seen in the last slide must be adhere to the rules and regulations which are prescribed for them in a special manner. Like suppose pension custodian is liable to pay the rules and regulations of the pension funds custodians. Same with the pension fund managers. They are liable to follow the rules and regulations for the pension fund management. Okay. This oversight is crucial for maintaining the integrity of the pension sector, protecting the interest of pension subscribers. All right. If you have just made the rules and regulations, okay, and the people is just only seeing the rules and regulations and they are assuming themselves that they are safe because there is someone who established the rules and regulations. But if you not regularly checked that whether the rules and regulations are being followed up or not, what it will do? It will do the malpractice of handling the funds and the custodians. All right. So that's why it is really essential for integrity of the pension sector, as well as it is essential for protecting the interests of pension subscribers. All right. Second function is formulation of regulation, guidelines, and policies. Okay. PFRDA formulates and updates regulations, guidelines, policies that govern the functioning of pension funds and pension related schemes in India. All right. These regulations covers various aspects including the investment rules, fund management procedures, and the subscribers protection. Okay. So the things which are to be remembered here is they made the regulations, they set the guidelines, they follow up the policies. Okay. To govern the functioning of pension funds and the pension related schemes. Whereas these particular things, rules, guidelines, policies, regulations, whatever you can say, are basically includes various aspects. Some of them are investment rule, like what should be the amount which is to be submitted on the periodic basis and how the investment will be done. Fund management procedure, like whether the amount will be invested in the stock market, in mutual funds, or whatever you can say. Okay, all these things should be mentioned. Thereafter, the subscribers protection. Okay, in case of any unforeseen stage or any unfortunate stage, so how the subscriber is liable to pay to save himself. Okay, and set out the liability of the pension custodians or pension fund managers towards their subscribers. Okay, so this is the part of second part. Okay, now let's move ahead. Thereafter, we have these regulations provide a legal framework for pension fund managers and other stakeholders to operate within, promoting transparency, accountability, and proper management of pension assets. Like in the previous lecture I had told you, if you just only say that you are regulating, but you did not have defined the proper ways for the procedures to be taken up, security measures, okay, follow-ups, then how you will regulate the market, right? So that's why it is very, very essential that the PFRD should set the regulations, guidelines, and policies to provide a legal framework for pension fund managers and other stakeholders to operate within. Okay. Thereafter, now we have the licensing and regulation of pension fund managers and custodian function. Okay, it means that suppose if you want to become a pension fund manager, or we can say suppose if there are 10 people, okay, these 10 people want to invest rupees 1000, okay, on the periodic basis in order to receive a particular return after their retirement. All right, and now they have got two options, A and B. Okay, A is claiming that it is safe to save with him. Okay, B is claiming B is safe if they save their money with him. All right, so how does these people decide? How should they decide that whether they want to spend with A or B? What should be the procedure? Now it's a generalized question to you. What should be the adopted procedure in that case? You will say just check out the policies, higher returns whatsoever. But here is the question of more than these things, and the question is basically authentication. Which of them is genuine person? That's the main question. All right, and how this genuinity should be decided by the licensing. It means that if A or B, any of them holds a license provided by the PFRDA, it means that that particular organization is liable to adhere with the rules and regulations set out by the PFRDA. All right, so they could simply check out whether the A or B holding the license or not. Okay, and the one who is holding the license should be the path of authentication, and it's safe to save their money with them. Why? Because in future, if anything negatively happens, then these people will have a right to move to the appropriate authority. Okay, because they have invested the money in that particular fund manager or custodian which having the license from PFRDA. Okay, so the PFRDA grants licenses to pension fund managers and custodians who wish to operate in the pension sector. All right, this license ensures that these entities meet the required standards and criteria. All right, as I have told you, once you applied for obtaining the license, you have submitted your consent that you will adhere the rules and regulations. All right, thereafter PFRDA also regulates the conduct of these licensed entities, monitoring their activities to ensure that they continue to meet the regulatory and ethical standards expected in the management of pension assets. Okay, like in the previous example I had given you, if there are 10 people who want to invest their money, then they should go with the authenticated person. And for this kind of things, they have to check that whether this particular entity having the license or not. Right? So if the particular entity having the license, it means that those people will believe that saving the investment with this is beneficial, you can say. All right, but if the PFRDA just granted the license and never looked at back and didn't aware that whether the fund manager or custodian is properly maintaining the rules and regulations, they adhering the prescribed policies and governing rules or not, so it means that there is no point of having the license in that case. Why? Because license is for the adhering to the rules and regulations so that the people should feel safe. But if the authority is not checking out whether the particular fund manager or custodian is doing this or not, so there is no point of having the license. Okay, so it is necessary to continue to meet the regulatory and ethical standards expected in the management of pension assets. All right. Thereafter we have the performance monitoring and corrective actions. Okay, PFRDA is responsible for monitoring the performance of pension funds, particularly with regard to adherence to prescribed investment guidelines. All right. These guidelines are established to ensure the security and growth of pension assets. Okay, so you can say PFID is responsible for monitoring the performance of pension funds, whether they are doing good or not. Okay, so that it could prepare a report and publish it to the general people, so that the people could go through the report and find out whether it is beneficial to invest with that particular fund or not. All right. Secondly, it is also necessary to ensure that they are showing adherence to prescribed investment guidelines or not. Okay, these guidelines are established to ensure the security and growth of pension assets. All right. Now, in cases where pension funds deviate from these guidelines or face financial challenges, PFRDA takes corrective actions to protect the interest of pension subscribers. All right. So you can assume, suppose these 10 people had invested with the entity having the license. Okay, they had invested with it, but what happens? The particular entity which having the funds of the people are facing the financial challenges, or you can say deviated from the guidelines. All right. So in order to protect the subscribers, pension subscribers, PFRDA will activate itself. Okay, and will started taking the corrective actions to get the pension fund on the right track again. Okay, such actions may include first issuing warnings that you are doing something unethical, directive corrective measures if the organization is deviated from the path, so they will ensure that corrective measures should be released to them, or in extreme cases it means that intentionally the fund of the people have been invested in a wrong place for some personal, you can say, issue or personal benefit, suspending or revoking license. So in such a case, PFRDA will launch the probe, or you can say will launch the investigation. Okay, and if PFRDA finds out that that particular you can say organization or thing has not been doing the ethical things intentionally, it means that the license should be revoked immediately, so that example should be set out. Example should be set out. All right, so that other pension fund managers or custodians who are thinking the same must be alerting themselves. Okay, and not to these kind of things. All right, so remember this point. Thereafter, promotion of pension awareness and financial literacy. All right, mostly people are not, I'm not talking about the government people. Okay, I'm talking about two sectors people: organized sector, or you can say unorganized sector. Okay, why I'm not talking about the government people? Because mostly of them are aware about the pensions and enroll themselves. Okay, but when we talk about the unorganized sector or the primary part of it, and we talk about the unorganized sector entirely. Okay, so here mostly the private people or the private sector, and here whole sector. So mostly what happen, the people of them are generally not interested or aware about the pension schemes. Why? Because they seem that it is some kind of thing that you have to give your money and then you will get it back. All right. There is nothing more knowledge they have. All right. What should be the benefit, advantages, and other things they could have got? They are not generally aware about it. Okay. So what PFRDA does, PFRDA make sure that the people must be aware about the pension schemes and must be aware about the financial literacy. Okay. So PFRDA actively promotes pension awareness and the financial literacy among the people. This is a critical function as it aims to educate individuals about the importance of retirement planning and pension savings. Okay, so that more and more people could enroll themselves into the pension schemes, and when it will happen, more and more players will try to enter in the pension fund. This will eventually lead to the welfare and the economy parallelly. Okay, economy because the business activities will be grows up, and welfare because the people will get the after retirement pensions. Okay, that will be benefit for their after living standards or after job living standards basically. Okay, PFRDA conducts awareness campaigns and initiatives to inform people about pension schemes like the National Pension Scheme NPS, which is on the voluntarily basis, and the Atal Pension Yojana APY. Okay, helping them make informed decisions about their retirement planning. Okay, so that these people must plan their future while they are working. Now we have finished the functions. Now it's a part for initiatives. All right, so let's begin. First is National Pension System NPS. Okay, what are the objectives of it? The National Pension System NPS is one of the PFRDA's flagship schemes designed to provide a voluntary defined contribution pension scheme for Indian citizens. All right. Its primary objective is to encourage individuals to save their retirement and build a financial nest egg. Okay, so here you can see that first is it is a flagship scheme designed for a voluntarily purpose defined contribution pension scheme for Indian citizens. Okay, it means that you have to submit it or contribute it a particular amount on the periodic basis for a certain period of time, and then after retirement you can redeem your pension. Okay, its primary objective is to encourage individuals to save for their retirement and build a financial nest egg. Okay, it means that make sure the people must be aware about it. They are not having the money right now, but they will have it after the retirement also if they invest in that money. All right. Thereafter, what is the structure of the NPS? NPS is structured as an individual retirement saving accounts where subscribers contribute regularly during working years. Okay, it is on the individual basis, not on the you can say group basis. Okay, so you can say suppose if there are 5 people. Okay, and because here write me the number 1 2 5 1 2 3 4 5. There are 5 people and they all wanted to invest their money into pension fund. Okay, so it is not possible in the NPS that they all 5 open a group saving account. Okay, and contribute some amount in it, and thereafter the retirement the amount will provide the pension to all of them. Okay, so this kind of thing is not possible. All right, so what is possible? If these are 5 individuals, okay, like 1 2 3 4 and 5, these are the 5 individuals. Okay, so they have to open their own account. All right, they have to open their own account, so that it is to be provided each and them individually, not to provide the pension to the group by opening the group saving account, but by opening the individual saving account, the pension must be provided to them on the individual basis. Okay, so remember this thing. These contributions are invested in a maximum mixing of asset classes, including equities, okay, government securities, corporate bonds, and alternative investments. Okay, it doesn't need that you are only required to save the money, like accumulated the money, but instead of this, you could also invest it in the equities, in the government securities, in the corporate bonds, or any alternate investment which is not lies in these categories. All right. Thereafter, now we have the choice and flexibility. What do you mean by it? NPS offers subscribers flexibility in terms of contribution amount and investment choices. Okay, like it does not define a particular amount which is to be invested only. Instead of this, it's provide you the choice that what investment you want to be made it. Okay, like you can say how much you want to contribute, okay, and what should be your investment. So this kind of freedom is provided by the NPS, you could say. Thereafter, it's having the system of tier 1 and tier 2. What do you mean by it? Let's see. While the tier 1 is a mandatory pension account with certain withdrawal restrictions. Okay, it means that you have to maintain a particular amount in it and you could not withdraw the amount which is hampering that particular limit. Second is tier 2 is a voluntary saving accounts with more liquidity. Tier 2 is a volunteer account. Like if you want to open it, you could open it. Okay, and it is having the more liquidity. It means there are no restrictions on it. So particularly you can say the NPS provides you the flexibility of choice. Like you could choose the contributed amount, like how much you want to contribute. Okay, investment choices you have, like where you want to invest it. Second, there are two types of account, tier 1 and tier 2. Tier 1 is the primary account. You could not withdraw the money crossing the certain limit, whereas tier 2 is a voluntary saving accounts which having no restrictions, so you could withdraw as much you want. All right. Thereafter, tax benefits of NPS. NPS provides tax benefits under Section 80C and Section 80CCD of the Income Tax Act. Okay, making it an attractive option for tax planning. Contributions made to NPS are deductible from taxable income subject to a specified limit. Okay, so you can say, suppose there are two options provided to you. If you have to pay the tax on the certain income, so you could invest a particular amount of that income into the NPS. Okay, so your tax rate will be comes down. It's the first. Second, the gain, or you can say the income you will receive from the NPS are deductible from the taxable income. Okay, up to a specified limit. It means suppose if you get the income of 10,000, so it is exempted from the tax slab. But if it's crossing the 10,000, then the tax slab will be applicable to it. Okay, so this kind of tax benefits are being provided to the member of NPS. Thereafter, we have the withdrawal and annuity options. Upon retirement, NPS subscribers can withdraw a portion of their accumulated corpus as a lump sum, while the remaining amount must be used to purchase an annuity, ensuring a regular income during retirement. Okay, so this kind of options are also available with them. Thereafter, now we have the portability. It means transformability. NPS offers portability, meaning subscribers can continue their NPS account even if they change jobs or locations, making it a versatile retirement saving options. Okay, it means that suppose when you open the NPS account, you have to submit your employment details, you have to submit your location and address. So it doesn't mean that if you have registered yourself on the NPS platform with one particular job, with one particular place. So you are not allowed to reshuffle your location or change your job. Okay, it is totally allowed, and that's why it's give the portability access. Okay, even if they change jobs or locations, making it a versatile retirement savings options. Okay, thereafter, now we have the objectives. The Atal Pension Yojana is another scheme managed by PFRDA, primarily aimed at providing pension benefits to workers in the unorganized sector, as I had told you. Okay, who often lack access to the formal retirement schemes because they are not covered in the sectors which having the legal mandate before they establish it. Okay, they're generally part of unorganized sectors which do not cover under the legal mandate of the regulation authorities. That's why these people having the lack of access to formal retirement schemes. Okay, so for this kind of people, we have the Atal Pension Yojana on the volunteer basis. It means if anyone who is employed in the unorganized sector and wanted to be the part of pension sector, he could avail the APY. Okay, thereafter, what are the target audience of the APY? APY is targeted at unorganized sector workers, including these kind of workers like the laborers, maids, okay, drivers and others. These are not a part of formal sectors. Okay, there are no proper letter of employment provided to them. Okay, no proper salary account open for them, and other kind of legal things do not generally perform for them. Okay, that's why they are the part of unorganized sector, who may not have a regular source of income or access to pension plans provided by their employers. Okay, so this is the target audience of the APY. All right, now let's move forward. Thereafter, we have the fixed contributions. APY operates on a fixed contribution basis where subscribers make regular, affordable contributions based on their age and chosen pension amount. Okay, like in the starting of this series of PFRDA, I had told you one thing. What was that? I had told you basically pension is like a scheme where you have to contribute or submit a particular amount on the periodically basis. Okay, so the concept of APY is very similar to this. Okay, it means it is basically having the fixed contribution. Okay, where you have to, if you are a subscriber of APY, you have to make a regular but affordable contribution. It doesn't mean, suppose if a person is only earning the ₹100 month, ₹1000 monthly, okay, and that person want to be the part of APY, Atal Pension Scheme, so it doesn't mean that the contribution must be ₹1000. Okay, because it is the income of the person. If the person invested his total monthly income in the pension contribution, then what he will have to survive the month, right? So that's why their affordability must be designed as per their age and the chosen pension amount. Okay, so you can say if the person is having a younger age, I had told you the workforce starts from 15 years and ends at 60 years. Okay, so if the person is on the early ages, so generally the pension amount is low, so that the person could invest the low amount up to a longer period of time to accumulate a high amount. But if the person is on the late age or the middle age, so generally the pension amount is little bit higher, unless the case happens that the person having the senior citizen tag. Why? Because the person having limited, or you can say less number of working years left, so it means that he has to contribute more and more to accumulate a good amount. All right, so on their age basis, second, their pension amount. Okay, suppose if the person is earning ₹1000, so he could not invest the entire 1000 money into the contribution. So Instead of this, he could invest a certain amount like rupees 2000, 200, 300, 400, whatever he could. All right. So remember this thing. Okay. Thereafter, the contributions are relatively low, making it accessible to the wide range of individuals. All right. The contribution is low because suppose these people are those peoples who are not already employed in a formal sector. It means that these people are generally not aware about the roles, responsibilities, rights they have been provided of. Okay. So first of thing, why they should come to the APY? Why? If it's having the low contribution, and second, it's having the attractiveness to cover the wide range of individuals, then only the person will become interested in it, right? So that's the reason it's having the relatively low contribution and attracts a wide range of individuals. Got it? Thereafter, second provision in it is the guaranteed pension. What do we mean by it? Guaranteed pension. APY guarantees a fixed pension amount to subscribers after reaching a specified age, usually 60. Why? Because as I have told you, 15 years to 60 years is the working age we considered in India. Okay. So once the person reached the 60 age, it means that that person is formally retired. However, he could continue the work after it, but legally he should be not a part of a workforce. Okay. So it's guarantee a fixed pension amount to that person. The pension amount is determined based on the subscriber's contribution and age at entry, ensuring a regular income retirement. Okay. It means that suppose rupees 1000 you have contributed for monthly, okay, for 20 years. So 20 into 12, 2, 4, all right, and then 2. So it means that how many months you have contributed? You have contributed for, okay, it's 200, thereafter 244. Okay, so it should be 0. For 240 months, you have contributed 1000 rupees. So how much amount you have contributed? You have contributed rupees 2,40,000. Okay. So this amount will release to you in the particular fixed amount. It means suppose for rupees 500 per month, the amount is releasing to you. So you are entitled to receive the pension for how many months? How many years? For 40 years. Okay. Because in 40 years, the amount will become this like. Okay. So basically that is just an example I have provided you to make sure that you understood the phenomena. All right. So this is the procedure which is to be followed. The particular amount contribute on the periodic basis for the particular time period. In here, we had contributed it 20 years. So 12 months in 1 year into 20, 240 months. And when you multiply 1000 with 240, you will have this amount. Okay. And if you only discharge 5000 per month, then 500 per month, then you will have to continue this pension for 40 years. Okay. So this is the mechanism. All right. Co-contribution by the government. To make APY even more appealing, the government provides a contribution to eligible subscribers. Okay, like suppose government asks you, if you want a pension, you have to invest by yourself. Okay, it is correct in the formal sector because the people generally having handsome salary or sustainable salary for their survival. Okay, so they could survive during the working years and could also contribute for the retirement easily or comparatively easily when we compare the unorganized or the informal sector. What happens then? A person generally not having the access, okay, to the formal sector, to the banking areas and other things, and generally their salaries are low in comparison with the formal people. Okay, so they are not so you can say financially sound to contribute a handsome amount in the pension scheme so that they could have a sustainable income after retirement. So by virtue of this, the government also provides a co-contribution to the eligible subscribers. Okay, you can say the people who falls under the category of eligible subscribers, they got the contribution from the government too. This co-contribution helps boost the pension amount and encourages long-term savings. Okay. Thereafter, flexible exit and continuation options. Okay, what do you mean by it? APY offers flexibility in terms of exit and continuation. Okay, like if you want to continue after the maturity, even you want to continue, you can easily continue. But if you want to exit, you can easily exit. Subscriber can exit the scheme prematurely in the event of exceptional circumstances or choose to continue making contribution to enhance their pension benefits. Okay. So basically, these are the flexibility benefits, you can say. Event of exceptional circumstances, they could easily exist or choose to continue making contribution to enhance their pension benefits. All right. Now, after finishing this, now we have a pension fund managers, PFMs, pension funds managers. Okay, we had completed this. Now, this is the topic we have to look upon. All right, pension fund managers. Okay, so basically, we have to talk with the appointment of pension fund managers or PFMs. So let's see. First we have is their selection process. What is their selection process? PFRDA responsible for appointing PFMS to manage their investments of pension funds under schemes like the national pension systems. Okay, so basically you can say PFRDA is not a regulatory authority but also a development authority. Okay, development of whom? Development of pension funds. Okay, it means that they have to appoint someone who is eligible to maintain the fund in a particular manner so that the fund could be benefited or could be developed, right? So for this kind of things, they usually appoints PFM, pension fund managers. Okay, so PFRDA is responsible for appointing PFMs to manage the investment of pension funds under the schemes like the National Pension System (NPS). The selection process for PFMS is typically conducted through a competitive bidding process. Okay, interested entities both from the public and the private sectors can participate in this bidding process. Sorry for the pronunciation, bidding process. Okay, so what happened whenever PFRD decides to appoint the pension fund managers? They generally launches the bid for it, and the entities from the public and from the privates, both are invited to participate in the bidding, which is of the competition nature. Okay, the most eligible will get the chance. All right. Thereafter, what is their eligibility criteria? To be eligible to become a PFM, entities must meet certain eligibility criteria. What are these? Including their financial stability, infrastructure, and experience in managing investment. Okay, so these are the eligibility criteria. Like their financial stability must be good, the infrastructure to handle the data and all must be good, experience in managing investment. Okay, if they are very new or very new, then there are very less chances that they will be appointed to handle the schemes like NPS. All right, they must demonstrate the capability to effectively manage pension funds and adhere to regulatory guidelines. Okay, thereafter, what is their license issuance? After a thorough evaluation of bids and eligibility criteria, PFRDA grants licenses to selected candidates to operate as PFMs. Okay, you can say the one who wins the bidding competition. the one who wins the bidding competition. Their profile will be evaluated by the PFRD. Okay, and if they find that the bid and the eligibility criteria are meeting up, then they will grant a license, which means approval to operate as a PFM. Okay, this license authorizes PFMs to manage the investment portfolios of pension funds on behalf of subscribers. Okay, so remember this thing. Thereafter, what is the regulation of pension fund managers? We have gone through the selection process. Now it's a regulation process. First is compliance with investment guidelines. Okay, PFMs are required to adhere to the investment guidelines and regulations established by the PFRD, because under these conditions only they have got the license. These guidelines outline the asset classes in which pension funds can be invested, assets allocation strategies, risk management procedures, and other investment related rules. All these kind of guidelines are basically provided to the PFM, and they are required to ensure they complies with it. Okay. Thereafter, risk management. PFMs are responsible for effectively managing the risk associated with pension fund investments. Okay. PFRD mandates that the PFMs have robust risk management systems in place to protect the interest of pension subscribers. Okay. This includes measures to mitigate market risk, credit risk, and operational risk. So you can say PFMs, because they are the managers, so they have to manage the pension fund. Okay, for effectively managing the risk associated with the pension fund investment, because investment is the second name of risk. Okay, there is no doubt about it. So if you are making the investment, it means you are availing the risk. Okay, PFRDA mandates that PFMs have robust risk management system in place to protect the interest of pension subscribers. Okay, includes measuring to mitigate market risk, credit risk, and operational risk. Okay, so this is under the risk management. Thereafter, PFMs are required to maintain the transparency in their operations. They must provide regular reports to the PFRDA so that necessary action could be taken out, which includes information about fund performance, how the performance of the fund, portfolio's composition, and compliance with the regulatory guidelines. Transparency ensures that the regulator can monitor their activities effectively. Okay, so that's why reporting and transparency are very, very important. Thereafter, the cost structure and the fees. PFRDA regulates the cost structures of the PFMs, ensuring that they charge reasonable fees for their services. It means that the person who is availing their services must not be charged unrationally. Okay, so charges should be reasonable to promote the pension fund schemes. High fees can erode the returns earned by the pension subscribers. Okay, so PFRDA aims to keep the cost of fund management responsibly or reasonably, sorry, not responsibly but reasonably. Okay. Thereafter, monitoring and supervision. PFRDA conducts ongoing monitoring and supervision of PFMs to ensure they are operating within the regulatory framework. Includes periodic audits, inspection, and performance assessments to ensure compliance with the investment guidelines and adherence to the regulatory norms. Okay. Thereafter, now we have the corrective actions. In cases where a PFMs is found to be deviating from the prescribed investment guidelines or engaging in activities that pose a risk to the interests of pension subscribers, PFRDA has authority to take corrective actions. These actions may include warnings, penalties, or in severe cases, suspension or revocation of the PFM licenses. Okay, so this is the part of the corrective action. Thereafter, enhancing their competitiveness. PFRDA encourage healthy competition among PFMs to benefit pension subscribers. A competitive landscape can lead to better services, quality innovation, and cost efficiency in managing pension funds. Okay. Now, after finishing the initiatives, this part on PFMS, now we have the protective measures and the summary. Okay, so let's start with the protection, subscribers protection. Subscriber protection is a crucial aspect of the Pension Fund Regulatory and Development Authority's mandate. Takes several measures to safeguard the interest of pension fund subscribers, ensuring the transparency, proper disclosure of the facts and figures, and effective grievance redressal mechanism. Okay, so this ensures the subscribers protection in one step. Thereafter, first point, we have the transparency and disclosure, clear information. So the first is the clear information. What do you mean by it? PFRDA requires pension fund managers and other pension service providers to provide clear and comprehensive information to subscribers. Includes details about the pension scheme, investment options, fees and charges, and the terms and conditions of the scheme. Okay, so this kind of information must be disclosed in front of the subscriber. Okay, so that he could make the rational decision. Thereafter, second is periodic statements. Subscribers are provided with the periodic statements that detail the performance of their pension fund investments so that they could continue with this fund or could switch to the another fund. These statements include information on the contributions, account balances, and fund performance. All right. Thereafter, we have the stringent regulations. First is establish and enforce stringent regulations to govern conduct of PFMS and other entities in the pension sector. Second is regulations are designed in a way to protect the interest of pension subscribers and ensure fair and ethical practices. All right. Thereafter, grievance redressal mechanisms, establishing grievance cells. Okay. PFRDA mandates that pension service providers, including PFMS, establish dedicated grievance redressal cells to handle subscribers' complaints and concerns. Okay. Thereafter, what we have the swift resolution. What do you mean by it? Let's understood. The grievance redressal mechanisms are designed to ensure the prompt and efficient resolution of issues raised by the subscribers. Timely redressal of grievances is key element in subscribers' protection. Okay, it means that the grievance must be handled in a particular time period. Financial literacy programs. PFRDA runs financial literacy and awareness programs to educate subscribers about pension programs, pension products, and the importance of retirement planning. Informed subscribers are better equipped to make decisions and that align with their long-term financial goals. Okay. Thereafter, monitoring and auditing. Regular audits. PFRDA conducts regular audits and inspection of pension service providers, including PFMS, to ensure compliance with regulatory guidelines and standards. This helps identify any irregularities or deviations from the prescribed norms. Thereafter, performance assessment. The regulator evaluates the performance of pension funds and quality of services provided to subscribers to identify areas that require improvement. PFRDA establishes rules and guidelines to ensure that the contribution made by subscribers are protected and utilized for their intended purpose, providing financial security during retirement. This includes strict oversight of how pension funds are managed and invested. Thereafter, corrective measures we have. In case where pension service providers or PFMS found to be a violation of regulation or engage in activities detrimental to subscribers' interest, PFRDA can take corrective actions. These actions may include warnings, penalties, or even suspension or revocation of licenses, depending on the severity of the violations. All right. Collaboration and information sharing. PFRDA collaborates with other financial regulators and government agencies to share information and best practices for protecting subscribers' interests, especially in areas of overlapping jurisdiction. Okay. Now, we have finished the protection part, and now we have the summary. Okay, so let's finish it in a soon. In summary, PFRDA places a strong emphasis on subscribers' protection through various measures, including transparency, disclosure information, effective grievance redressal mechanism, educational initiatives, monitoring, and enforcement. These efforts collectively contribute to ensuring the security and welfare of pension subscribers and promote confidence in the pension sector in India. Okay. PFRDA focuses on safeguarding the interest of pension subscribers by ensuring transparency, proper disclosure, and effective grievance readdressal mechanism. Okay. So for competitive exams, having a good understanding of PFRDA's rules, functions, and initiatives is essential, as questions related to pension sector regulators and pension related schemes are commonly asked to assess candidates' knowledge of the financial regulatory framework in India. Okay, so students, basically with this we have finished this part, this PFRD. In the next lecture we will start with another important institution. Till then, just revise the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and say thank you.